I would request all the panelists to switch on their camera.
Just a moment.
A few more minutes. We're just setting up the system so that it's accessible to everyone on YouTube as well. Just a few more minutes. We'll begin.
Okay, Archana, you can start.
Perfect. So, a very good morning to everyone today. My name is Archana, and today India Business and Trade is conducting a webinar on Fintech 4.0, Business Acceleration through Embedded Finance. So joining us today, we have our five esteemed panelists. We have Mr. Vikul Goyal. He is the founder and CEO of Bimaplan. We have Mr. Hrushukesh Mehta, Senior Vice President, Financial Services, ONDC. Mr. Yashoraj Tyagi, COO and CTO, CASHe. Ms. Mayuri Shrivastava, she is the Wealth Head of Arihant Capital. And Mr. Ajay Chaurasia, VP Marketing, Product and Businesses of RupeeRedee. So I welcome you all. Thank you so much for joining us today. And before we begin with the discussion, all our audience, you can send in your questions or your queries on the Q&A box. And before we begin with the question and answers, let me give you our audience a brief on what is embedded finance. So the amalgamation of various financial services such as loans, debit cards, insurance, payment processing and investment choices into non-financial products is known as embedded finance. It's relatively a very new concept and the one which has taken the e-commerce and the online transactions to a strong. So it allows non-financial businesses to offer financial services provided by outside parties through integration into their website or through APIs, which is application program interface. So in some or the other way, we use embedded finance in our daily lives for big transaction or small. Our reliance on embedded funding has only become stronger and more evolutionary. And as a result of confluence of beneficial variables such as huge population, rising income level, increased smartphone and internet usage, and we have a quick digital economy growth. So through all these positive factors, we have been able to benefit from embedded finance. So thank you so much, everyone. So to begin with the question and answers, to begin with the session, my first question is to Mr. Vikul Goyal. Sir, you have been a serial entrepreneur and you have done different roles in the startup industry for nearly a decade. So in your view, how has embedded finance evolved as a concept and facilitated non-financial business over the years, especially across MSME segment?
Thank you, Archana, for having me on the panel, and very good morning to everyone. I think, Archana, first of all, embedded finance is not a new concept, right? We have seen that financial services have been, an enabler for providing any kind of core service or a product. So, for example, when you go and buy a car, it's an expensive product. Dealers have been offering loans on purchase of cars or sale of cars to facilitate the core objective, which is the sale of cars, right? And to facilitate the buyer being able to purchase it, easily, right? So that has been going on for a very, very long time. Now, while that was limited to a very small range of products and services initially, maybe very high value items, what technology does is democratize that access to even smaller micro transactions, because the cost of providing that service becomes cheaper, and it becomes more easy for unorganized players or MSMEs to also offer those kind of services, which were earlier provided by the organized trade or the larger players, right? So in that sense, I think it has enabled MSMEs to be able to provide that value and compete with larger, more organized chains, and enable more transactions, whether that is on BNPL, for example, or providing sort of insurance solutions, and there are tons of examples of those. So definitely, I see that as we as the economy grows and as the MSME sector becomes stronger, financial services will play an important role, and embedded finance in particular will kind of create that experience for customers that they have come to expect with the consumption of these products or services through large brands or organizations, and that same experience can be extended to products and services from MSME. So that's where I think embedded companies, finance companies will be able to access a new set of customers that they were not able to access earlier, and vice versa, enable the MSMEs to access those set of customers that they were not able to service.
Right. My next question is to Mr. Hrushukesh Mehta. So the government-backed open network for digital commerce, that is ONDC, aims to democratize online commerce for every business, whether it is big or small. So how do you view the relevance of embedded finance in growing e-commerce penetration and bringing in more MSME into the network of ONDC?
Hi, good morning, everyone. Thanks for having me. So look, just to echo some of Vikul's thoughts, look, it's not like a concept that hasn't been there, but I think the scale and reach of it has been hard to do, because there are regulated players on one side, the fintechs on the other side, or even just e-commerce players, and standardization of those rails to be able to scale that many times of what it is today, I think is the key challenge. So look, our thesis is exactly the same. So while e-commerce, yes, it generates sales and revenue for MSMEs, I think the grease that lubricates that is financial services, right? So credit helps drive growth of commerce. Insurance helps provide a cushion against economic shocks, right? For MSMEs, and especially, look, larger companies can bear economic shocks even without insurance, but it's the smaller companies that can't do that. And then the third is, even if you've made money, even if you've got this protection, eventually a lot of avenues for wealth creation are not available, and as simple things as even mutual funds, right? A large part of the country doesn't even know they exist. And whilst we tend to be very close to all these services and know they exist, they don't exist. Now, the other issue, don't exist in terms of access for the bottom of the pyramid or even smaller MSMEs. Now, one of the things we're also aiming to solve, and what tech solves for, is see, when you're trying to reach a set of customers, if they're smaller ticket customers, where it usually starts at that when they take their first loans and things like that, they are not economically viable to reach for the manufacturers of the products, which are the lenders and insurers and investment houses. So what happens is they just ignore them, right? Because why would you get a customer that makes losses for you? So I think what tech enablement does is enables reach at a much lower cost. And if you can standardize those rails and make everyone available, and so what is ONDC's overall thesis, right? Markets for sellers and choice for buyers. And eventually what we will enable, and a lot of people sitting in this room hopefully will participate on ONDC, is to make that reach, to make that connection. So fintechs have millions of users. The regulated entities want access to those users. Can we become the bridge to the two of them? Now, some of the other, just to, one more thought I'll give you, like, see, there's a lot of ecosystem changes that are required sometimes to make this possible. Like, so for example, you need credit guarantees to people who have not received loans before, because otherwise lenders are averse, or the cost of the loan shoots up terribly and makes it almost unaffordable. So we will work with the ecosystem to do things like that, to help drive penetration for new to credit customers, for underserved customers who don't easily get credit, and also surface more choice. So there is an ecosystem role where even if regulations now, the markets tend to be dynamic, but regulations tend to be static. So given we sit in a unique place and we have no vested interest other than the private sector to succeed, we will play some of that role as well in trying to enable this. And I think embedded finance is the way to go. It solves the cost of acquisition problem. Even if there is a commercial incentive where, say, a lender will pay in a ONDC parlance, the buyer app for every converted loan, they only pay when they make money. They don't have to spend lots of money on advertising and then get a customer. And that's true for insurance and investments and things like that as well. So hopefully our goal is to make more products available and bring down the cost of acquisition for both players. And hopefully we are very successful in doing that, because I think progress depends on our ability to succeed.
Right. Thanks, sir. So moving on to Mr. Yashoraj Tyagi. So embedded finance is undeniably a critical tool to access instant credit facility, and without going through the hassle of the paperwork that is traditionally involved. So if you can share with our audience the instant loan trend that has evolved through embedded finance in the Indian market, and how digitization has helped spread or popularize the access to instant credit loan.
So thanks, Archana, and glad to be here, and good to hear thoughts from Vikul and Rishi. And Rishi said that it would be good if we collaborate, and incidentally we were on a call just a couple of weeks ago. So there is, there's definitely a lot happening in the domain of what we now call as embedded finance. Although obviously, as Rishi mentioned, the concept has been there for a while. So I mean, like, what is it? Why is it that's we all talking about it right now? It's largely because a lot of financial products have become more about convenience than about availing those products in particular, which means that when we talk about, say, something like credit, a lot of people who avail credit want credit to be, or the act of availing credit to be, invisible per se, right? And since we were alluding to an example earlier, I believe Vikul was mentioning about, say, buying a car, right? And I would not want to, when I walk into a car showroom, go and download a bank app or call up my bank and say that, hey, look, I'm going to buy this car. What is the kind of credit you're going to give me to buy it? I would rather say that, hey, look, I want to buy this car, and I would require the car manufacturer or the showroom to sort of give me credit options alongside, right? It comes with the act of availing my primary instrument. That's the same reason why people do pay later for buying biryanis on delivery apps, right? Not because they can't afford it in most cases, but because it is convenient that somebody is saying that, okay, let me take care of this right now, you pay me 15 days later, right? And that's exactly why BNPL has become big, because in a lot of cases, BNPL is a convenience product, not really a credit product, right? Now, when you have to power these experiences, when you have to say that, hey, look, I'm going to buy a car, here's your insurance, here's your credit facility, and oh, by the way, if you want to buy it a year later, this is an investment plan that will allow it you to kind of save enough that you can sort of have enough to kind of buy this a year later. People don't want to be done via different platforms. And I'm not saying that, people want a super app experience as well for this. All people are just saying that, that the act of having all of this should be done on one single platform where I am doing my primary experience, whether it could be buying a biryani or buying a car, right? And that's the reason why embedded finance has taken off the way it is. When we talk about credit, I believe that coupled with a lot of factors, with the fact that India is massively credit starved, B, that India has got one of the fastest rates of smartphone penetration and the fastest rates of internet penetration anywhere in the world globally, with one of the cheapest data accesses. The amount of information that you have available on every individual consumer level, with an enormous amount of digital footprint of transactions, it is possible for you to make credit decisions on the fly, even when a customer is not as per what they say on your platform, as long as you have the relevant open APIs or even your own proprietary APIs that are plugged into a range of platforms where you are embedded as a lender. In our case, we are able to, for example, in the case of Google Pay, where we happen to be one of the largest lenders, it's not that the customer is coming on our platform. We are interacting with the customer on Google Pay itself. And when a customer is on GPay, we get a range of information from the customer's transaction histories, and we interact the customer bases. That is a pure example of embedded finance. So and we see a lot more of these use cases emerging, a lot more, particularly in the light of the fact that since the government has recognized and put regulations around data accesses, that makes it more regulated and hence more crystal clear in terms of what should be done and what shouldn't be done. And once you know what can be done, within the right regulatory guardrails, with this relevant kind of data accesses kicking in, it'll become easier for people, across firm lines to also underwrite customers for various financial products and offer them on different platforms, right? Via, as you mentioned, this could be completely embedded integrations or iframe integrations or API integrations, whatever those are. So I feel that, financial services are going to become more invisible to people and hence become more embedded as we go ahead. And credit is just one subset of that.
Right. To Ms. Mayuri Shrivastava, ma'am, digital financial solutions are now at the palm of our hands. So all we need is a smartphone and good internet connection. So, what does this mean for those looking to utilize embedded finance as a mode of investment?
So, hi, Archana. Actually, because of this Android phones and in-hand embedded finance, investments have also geared up a lot. Like people to whom it is not approachable now, they are understanding, they are trying to just click and do that, and the flow is increasing. Like if you'll see the data of investments, like I am from the broking industry. So like when we talk about the number of DMATs, the mutual fund investors, and that has increased a lot. And this embedded finance and in-handy tech support have increased the flow a lot. Like if you'll see, the rural consumption rates are higher than the urban. So urban people are definitely aware about a lot of options or about the finances, about the investments and a lot other things. But the rurals are beyond the reach of all these things. Like people do not approach, they do not know, and they are stuck among the vicious circles of the informal loan systems and all. So embedded finance definitely and fintech support have increased the flow of investments as well as the loans from there as well. So that is helping a lot to the Indian rural population a lot. So we are getting good response from there as well, and is going to help economy a lot. So
right. Moving on to Mr. Ajay Chaurasia. Sir, the market on digital payment is rather competitive in India. We have venture capital, then non-banking financial corporations, payment apps. So in your view, what is the outlook of this sector in the coming years?
See, competition is everywhere. Whenever you look at competition, going into any industry, there is a competition. But when you look at the population of India, last 7 years after demonetization, first 4 years was just knowledge sharing. Because of the COVID came in, people started moving to the digital transaction much more often compared to the pre-COVID. And now that BNPL, as Yashoraj was saying, that BNPL became a convenience part of it. So the target audience is still there. We still have not been able to capture the entire market. If you look at the financial services and the offerings that everybody is providing right now, still there is a huge population which is still looking for credit. People are still want to invest, but they don't know how to invest. So I think at this point of stage, we are still at the awareness kind of a campaign where we're still awareing the rural part of the India. They are still coming onto the mainstream. Currently, most of them are probably using Google Pay, UPI for their payments. But yes, they want more accesses, right? That's where insurance is coming up into the picture. Now, if you say, I think every lending company has an insurance as an additional product, which they're offering to their consumers and they're buying it. Initially, if you want to go for a health insurance, probably a health insurance product it becomes costly for a tier 2 city citizen, right? He doesn't want to spend 10,000, 15,000 on insurance because that's probably maybe his average capita income. But when you look at a product called HospiCash that is there, which is like just maybe he would get it in 300, 400 rupees. So people are accepting that. Financial transaction is definitely going to up. For us, we have been able to grow from last 4 years. We still looking to grow further because customers are coming and applying for loans. They are looking for more options. And as Yashoraj said, the convenience is the most important part. Like giving an example, I use a buy now pay later option, which is not mine, but obviously a competition, but it gives it ease because, my brother uses it on an application. It's just linked with one number. My wife uses it. I use it. And I don't have to give my card or my UPI to do it. They keep on doing the transaction on multiple platforms. If they're buying groceries, probably they're going for something else. And this is where it enables the possibilities and the convenience to my customers, wherein, it becomes much more easier. I don't have to share because remember the past days, probably you will get a call from your mom that, okay, can you give me 20,000 rupees and then I want to go for shopping. While today, they have my account logged in and they can just enter a couple of details and they can do all the shopping and they don't call me like 5 times a day for a transaction. Yeah, end of the day, I have to pay the bill, but yes, it at least it gives the convenience there. So for in the future growth point of view, I think 2025 would become a very much deciding factor. REs are doing their best. Almost every fintech company which is into lending today has their own NBFC. While they're working with multiple NBFCs, they have their own NBFCs as well. And we all agree to one point that the penetration to tier 2 and tier 3 cities are increasing. The attraction is coming more from these cities compared to tier 1 and tier 2 for these kind of loans, for small personal loans. And when you look at two-wheelers, car loans, even now banks are offering the solutions wherein before you go and buy the car, probably you already have a pre-approved car loan up to a limit that you go there, you just provide your details and you process. So I think financial sector is still going and embedded finance is definitely helping us a lot, not just to provide the convenience, but also for us to acquire more customers in the coming time.
So shifting the conversation a little bit from, the accessibility to, to the tech aspect. So to Mr. Goyal, so how do artificial intelligence and machine learning fit into embedded finance for various financial services? So how is the relevance expected to improve over the years? If you can just give a little bit of information on this.
Right. See, if I talk about insurance and, I think Yashoraj mentioned about the ability of lending companies to be able to offer instant loans based on certain data that can be shared across companies or across apps, right? Again, I would probably take that same example of, buying a car at a dealership, right? Which I think everyone seems to understand and use. See, what happens is you go into a dealership, the embedded finance bit is there are 3 or 4, lending representatives who you have to talk to and who you have to share your data separately, and they will give you an approval for a loan, over a couple of hours to a couple of days, depending on their own internal processes, right? And it's a painful process for a user. Now, imagine if the user, again, how Yashoraj mentioned that it's, these services need to be invisible because they are not the services that a consumer is looking to consume. They are just an enabler or a grease to make the transaction more frictionless. So the ability of these different players in that particular transaction to be able to share data seamlessly and build complicated analyses or models very, very quickly based on that data that is being shared and give an outcome, whether it's the underwriting limit, the insurance products that a person is eligible for at that particular point in time, or the amount of loan that can be accessed at an interest rate that can be offered based on their creditworthiness, right? Despite not having, say, a formal credit score, right? So all of those things, data plays a very, very crucial role, because that data is not available to the manufacturers of these products independently, because they don't know the customer. They don't have any prior history of dealing with that customer. So there, I think data and then utilizing that data through various machine learning models to derive useful information that can be used becomes very, very critical, and frankly becomes the core of how cheaply you can provide that product, because everything will have a cost to it. And if you have better data, better analyses, better models through these technologies, through artificial intelligence, you can bring the cost of providing that product, significantly lower than what it would be. So I think it will have a huge impact, and we are already seeing that. The second impact that I see it is, embedded finance is not just about selling at the point of sale, right? At the point of transaction. It's also being able to provide services to the customer when they want to avail the product that you've sold to them, right? And unlike credit, for example, where the utility of that credit product is at the point of sale, a risk product like an insurance, the moment of truth comes much later, when you bought the product, but now you have a problem 1 year down the line. And how do you access that service? Whether that claim that a person that the buyer has filed is relevant, is genuine or not. And therefore you need to build these complicated risk models, again getting a lot of data from various sources, external as well as the stakeholders involved in that transaction, to be able to give an instant outcome to that customer, a resolution to that customer, which becomes really important in the future sort of perception of these products. Insurance products are typically not very well perceived, in the sense that people think we will not get the claim anyway, so why bother? But if you can change that perception using technology and getting faster resolutions, I think that will have a huge impact on how these products are perceived and ultimately consumed.
That's so, sir. To Mr. Hrushukesh, so embedded finance enabled by the banking as a service business model has become an integral part of the e-commerce ecosystem. So digital was initially dominated by wallets, credit cards, so supported with insurance products, and now there is this trend of buy now, pay later, which is almost applicable from to all the products which are available on the e-commerce site. So will embedded finance in any way undermine the traditional financial services companies in the coming years?
No, so look, I want to actually dispel one myth, right? Everyone sees ONDC currently, especially because of the media coverage, as a killer of some company and disruptor of some market, right? I would encourage everyone to think of it as a tool which facilitates market expansion. And I'll explain how, right? Look, I'll just quote 3 stats related to credit, to insurance, and to investments, which are well known, at least to the players. Credit, there's an IFC report that says some $300-400 billion gap to MSMEs. Insurance, if we say we're only 4% as premiums to the GDP, when Western countries are 25 to 30%. Investments, we say, I think 7% of Indians have ever invested in a mutual fund or in an equity mutual fund, right, to have exposure to larger returns over time. If the traditional models had solved for that, we wouldn't be in this state of under-penetration, right? So what we will do, and to echo, I think what some of the guys are already saying, look, credit, it's not limited to buy now, pay later. So what we will do, and I think Yashoraj had touched on this, is what we call derived data use cases. So if there's platform data sitting on, say, a company that helps dairy farmers with cattle purchases, now they know the health of the cattle, they know the performance of the dairy farmer. That digitized data can be provided to lenders to unlock loans to purchase capital. So what does that do? Expansion of credit, expansion of a market, a use case that nobody would have otherwise previously financed. From an ecosystem perspective, we'll provide a credit guarantee from the government machinery, including, I mean, and that's too early to say, but we're working on this interest subvention scheme as well, where for new first-time borrowers, for underserved borrowers, we'll actually give them a discount on the interest rate so that at least it can get them going, right? Now, that's on credit. On insurance, and this dairy cattle is just like one use case. You can do it for retailer financing, wholesaler financing. I'm a seller on Amazon. I'm a seller on government e-marketplace. Everyone knows that's a well talked about use case. We did it in a Crucible pilot format. But so that's just credit, right? Then on insurance. So look, to Vikul's point, it's not only the sale, it's also the recovery. So on the sale, but however, like for example, marine insurance, especially in the ONDC environment, seller apps selling marine insurance, where someone accepts an order and ships a good. Can they buy a CASHe insurance? Can we provide CASHe health insurance? Can we provide sachetized products? So what did sachetization do for Unilever, right? You made shampoos into 1 rupee packets and suddenly the market exploded. So why can't we learn from that and do it in financial services? And he's right. Like, look, in lending, it's not only about giving the money, it's getting it back. So the models become very important. Insurance, it's not only about selling it, it's about processing the claim efficiently. Otherwise, like it's one side benefits, the other doesn't, and then the product doesn't take off. So look, there is work going on in how do you automate those claims, but there we need the policymakers and the regulators to step in, because if you want to build an insurance repository to help automated claims processing, these all need to be done in regulated spaces because there's lots of sensitive data. And then on the final piece, on like say even investments, right? See, everyone talks about like when we talk about it, we talk about a different level of abstraction and complexity. Like you go beyond mutual funds and alternative funds and PE investments and angel list and things like that. I'm like, yeah, half the people, not half, like I would say 90% of the people in the country don't even know mutual funds exist. Their options for investments are chit funds and fixed deposits. So our job is first to create access. Then once access is created, then you do education. Then if it scales, there'll be all sorts of other problems, but then we'll worry about that at that time. And look, we've spoken with all regulators and all regulators are aligned, because at the end of the day, it is even the regulators' incentive to expand the market. So my point to you is, look, when new tools emerge, they're not necessarily disruptors, they're tools to expand the market. Will it disrupt dominant incumbents? Yes, but then the dominant incumbents need to know how to use the new tool as well, right? It's like saying 25 years ago when the internet came about, oh, it's a big disruptive force, but every company worth their salt has embraced the internet in some form or fashion, right? So it's the same thesis. So I would strongly, and I know give a very long-winded explanation, but it's not a disruptor, it's an enabler. It's just how you choose to use it.
So coming to Mr. Yashoraj, embedded finance enhances product recommendation and increases sales opportunities. So how does the company stay ahead of the competition and simultaneously increase customer acquisitions, engagements, retention, and repeated sales?
I think a large part of this question was also already answered by Hrushi when he said that people should embrace the change in terms of what is coming about. And as I said earlier, like we're talking about embedded finance by giving it a term right now. It's always been there, and you've always seen companies embracing the curve and going about it. There was 2 years back, there was this big thing about offline to online digitizing SME Kirana store tech, and literally everybody out there who was in any kind of building any kind of commerce rails was building solutions for that. A year back, it was all about adopting more of a D2C flavor. Even if you are even if a large FMCG MNC brand, because that was a flavor of the season. And I feel that embedded finance is again a broad term for just making sure that you are where the consumer is and you are doing what the consumer wants. And my previous two examples were just to state that that people have always adopted to what the flavor of the season as far as consumer interests have been concerned has been there, right? Like so I feel that it's not really as much about saying that that's going to create more competition or make it difficult for people. It's all about saying that it's first principles of business that be present where the consumer is. And if embedded finance or more precisely the technology that allows you to get embedded and or still offer your core value proposition on other platforms is now more present than it was before. And if entities are not embracing it, then it is largely a lackadaisical approach on their part, because again, like they need to be present where the consumers are. If consumers want financial services to be invisible, they need to create experiences around that. If people want, if there are people out there who are delivering the same core value proposition that you are, except that in a much crisper, shorter, and faster journey, and you're still sticking to the same old process, then obviously that's again a lackadaisical approach on the on your part again. Because if we were all talking about the same car dealership example, to my previous point, if for example you are a lending company and you're not you do not have a platform that can allow a third party entity to allow your services on their platform whenever a consumer walks in for any purpose, right? But you still want people to go through your own platform, call you, etc., etc., it's not going to really work out. So I feel that it's more about increasing. It's actually less about increasing competition. It in fact increases for everybody who sort of embraces it. It increases the surface area for business expansion significantly, because now you're not really concerned about getting customers on your own platform. You are acquiring customers and being able to service them if you do it the right job. If you do it right, if you're doing that across a whole range of platforms, platforms where you would never thought about that you could also probably get customers from eventually. So I feel that I think there's a lot to be done, and I feel that's going to, again, Rishi's word, really expand the market. This set of technologies, the reason I say technology is because it is as much about the capability of being embedded as much as it is about using personalization and data to actually offer those services on the platforms where it's embedded. It's these set of tools that really allow you to really increase the surface area of where you can get customers from, where you can service them if you do it right. And I think it is then the onus on entities who are in the financial services or allied domains to make sure that they use it to the best and don't for whatever reason don't ride along the curve there. So I think that's really what my answer to this question would be.
Yeah, absolutely. Coming to Miss Mayuri, ma'am, you mentioned that the digital penetration is now accelerating in the rural areas as well. But as Mr. Hrushukesh said, that many of them don't even know. I mean, across the country, many of them don't even know about services or products such as mutual funds. So, what are some of the challenges that you have seen in your view pertaining to financial services, and how embedded finance itself, can improve itself to reach those locations where awareness is lacking?
So yeah, like Hrushukesh said, like Yashoraj said, both have said the same thing, that we have not yet acquired maximum of the population. Like 7 to 8% of the investors are only there. So everyone is chasing the same set of clientele for the finances, for the investments. So embedded finance and fintech has opened a platform from where we can get the new clientele. So the people who are not aware about the investment options available, like Mr. Hrushukesh said, people are still investing in the FDs only. They are not aware about the mutual fund. Very true. So now when they see on the fintech platform, which they are using for some other service, a new product, so they do study about it. They try to read out, they try to understand what exactly it is. So this helps to get the new investors on the platform. So definitely it's a challenge. Now, when we talk about the insurance, people are not aware about the insurance. They only know one brand, which is from the government. Everyone feels this I have taken. They are not aware that this is insurance. So this is definitely, this is available and this is there in the market. But this fintech and this embedded finance have made it available to those set of clients who are not aware about this. And when they learn about it, when they ask about these products, the education goes there, and then it will definitely help in increasing the finances. Like somebody said, it will be a great boon till 25. Definitely 2025. So we have definitely started it yet, but in next 2 to 4 years, this will help a lot and bring the new investors as well as the clientele on the platform. So it is going to bring the awareness in the rural areas as well. So it is helping a lot. It's a boon actually.
Right. So coming to Mr. Ajay, so there is lack of awareness in the market, but along with that, there is also a challenge of network connectivity and access to smart technology. So, such as in tier 2, tier 3 cities or in villages, many of them do not have access to smooth internet connection. Many of them do not have access to smartphones. So, what can companies do to take embedded finance further, especially in the areas where technology is a constraint?
Well, I'm not sure. Do we really have that problem in India anymore? Because I come from a tier 2, tier 3 city, and when I travel, almost everybody has a smartphone in their hand. But yes, we are. I think the industry is working on it. Recently, Jio is coming up with the feature with the low budget smartphones. So they're already trying to disrupt. They've already disrupted once with the data. They're planning to probably come and disrupt with the new features phone as well. So I think internet connection is there, but now lenders are trying to get to a DSA model. So earlier, when you look at the traditional ways of methods, were that okay? We want to used to have branches. They used to have DSAs, and then that's how it used to work. But today, if you look at a lot of DMT transfer partners are there across India. So if you go to tier town, tier 2, tier 3 city, a small shop which probably has a maybe it's an Aadhaar Kendra he's probably creating your documents, but he's also doing money transfers for you, and he's also doing 10 more different things. So that could be the next step wherein we would the companies would like to partner with these individuals, and then expand the services. While it will definitely it's still debatable whether it's going to work, because credit is, in terms of lending, it's not just about giving the money, it's about collecting the money as well. And you need to control the narrative there, that okay, you're giving this loan while this person is responsible, you have to pay back as well. Because in the recent times, I think Yashoraj from CASHe would also relate that there are certain scenarios in India that is happening where in a certain city, somebody like a shop owner is giving 200 loans and not repaying back, right? Telling the wrong story there. So challenge is there, but yes, we with the help of the internet, we are already penetrated. We are already reaching out to the market. There are almost every month there is a new set of NTC customers are getting into the market. We can reach out to them via TSAs. There are other challenges for it, which industry has to still figure out. How do we go ahead and make sure that while we are offering these solutions, there is a timely repayment also happening, and then how it can work. And coming to internet connection, I think with the mobile phones, India is a growing country. Everybody is aspiring. Somebody wants an iPhone, somebody wants a car, somebody wants a house, and people are, I mean, you can see you can't even get a car in the 6 months, even if you book it today. So that's the kind of demand that is there in the market. And smartphones penetrations are happening. There are new models coming in every month. I think if you just go to any tech YouTube channel, you will find 10 different phones launching every week, right? And consumers are taking those phones. So reaching out to the audience is a challenge. But if I talk about internet connectivity, I think in India there is internet connectivity almost across. The whatever segment is not there, they're not because of the internet or because they're still underserved. they still don't have that kind of income to buy this kind of phones. So they're probably dependent upon banks. If you go to any tier 2 city bank today also, you will find 100 people at any given point of time. They're probably there to submit the deposit the money or take out the cash or just go for the passbook. So education is important there. Something has to be done. Either could be a great brand marketing activity done by one of the brand and can reach out to the audiences like we did with the UPI in the last few years. If we can reach out to these audiences, give them a platform to come and then probably work on it, then definitely it can work out.
Thank you so much for your inputs. We have a couple of questions from the audience to Mr. Yashoraj. With great technology comes great risk. So what is your view on the risk that comes with embedded finance, such as maybe data leak or theft or payment default?
No, I feel that that's a very legitimate question. And, and what does happen is that a lot of times when, if I take the example of credit, if as a credit player, we are embedded on another platform today where we are offering credit-related services, it's if in the eyes of the regulator, in this case, which is RBI, the onus comes on us, which is the RE, to make sure that data accesses are all kosher and all due caution is being exercised. So it's the onus on us as the RE to also make sure the partner we're working with checks off all the boxes that when it comes to being regulatory compliant. And that's exactly where I feel that there is this element of not using tech and creating a growth at all cost strategy is a good thing to do. I feel that there has been a lot of that kind of an activity over the last couple of years, and I also feel that because of this reason is where the regulator has also come out specifically in the credit domain with a slew of successive guidelines, which now make things a lot clearer in terms of what a lending service provider or what a digital lending agent or what an RE is supposed to do and not do, and what guardrails is everybody supposed to operate in. And I feel that if everybody even operates in the spirit of what is actually been there prescribed in the guidelines, and even if somebody does not going over and above that call of duty, I feel that customers will not have a lot of worry about when it comes to how the data accesses are managed. So I feel that while there have been a lot of risk, I feel from a regulatory angle, from an industry self-regulation perspective, as well as from a general sense of knowing that that if people don't adhere to these basic hygiene factors about how to handle data, how to manage security, customer trust will be lost. So because of a range of these factors, I feel we have moved in the right direction and may make significant strides as well. With a lot more adherence towards common OPI standard, common API standards coming up in the industry, I feel that there'll be a lot less discretion that people will have in terms of saying that, okay, I want to do this my way, right? If there's a common set of protocols, you have to adhere to that, and hence that comes to the common set of security standards as well. So that will be my sort of answer on that.
The other question is to Mr. Hrushukesh. Our audience is, one of the questions says that there may be a lack of regulation on embedded finance in India. So what regulatory compliance can be introduced to make such services more authentic and safe?
Look, that's a very broad question. But see, by and large, just to echo what Yashoraj was saying, I wouldn't have answered it any differently. See, the genesis of regulations is when things were sold by people, right? You were in person, someone came and explained it to you. And then with the incentive to sell, they told you some lies. And I used that word specifically. You bought something you didn't understand, maybe even digitally, in 2020, 2021 during COVID, all those, they blamed Chinese apps, but it was all apps, not all apps, but some specific digital lending apps that would tell you you're getting a 10,000 rupee loan, but 1,500 rupees was a servicing fee and things like that. What happens is when there are no standards, these sort of things happen, right? And then there's like erosion of trust in whether you should buy something on one side, and then regulators get involved when you get very onerous requirements on how something can be sold, how it's going to be represented. I think these standardized protocols and what are we trying to do at ONDC? We're trying to build like a playground with some rules, but those rules should not be too onerous. Look, a private sector guy is building a public good. So like I feel everyone's pain when you don't want like a 100-page book of regulations of what someone needs to adhere to. You want to make it simple, you want to make it light, and you want to make it standardized so everyone knows the rules of the game, what needs to be displayed. And then they compete on the best product being offered to the customer and then displaying it the best way, making the best recommendation and so on. So I think what we need, like this is why we believe so strongly in the standardized protocols. Now, will regulations evolve over time for this? Yes. See, what happens is regulations are formed for a particular problem of that time. Now, as times change, the business environments change, we sit in a unique position to at least provide our observations to the regulators and then push it in a direction which is beneficial for expansion. Because look, there's certain things in the regulations which are now actually bottlenecks to growth because they've not kept pace with the digitization as that has happened. So we will play that role and that will evolve over time. And I think the regulations, in my opinion, and this is purely my opinion, should become lighter as we start adopting standards. Because if you're adopting a standard, it's anyway enforced in code, right? What has to be displayed, the process, what payloads will be sent up and down between partners. And look, even the other thing is that everyone needs to take note of is the data empowerment protection architecture, which, or, the act which is now in Parliament. That is going to get notified probably soon, like in the next year or so. Now, see, even the way we've constructed it is that the buyer app, which is the unregulated entity, especially in lending, is very light on the storage of data. And most of the heavy lifting is done at the regulated entities end. So that also then becomes, then the regulator, just take, say, Yashoraj's case, right? They want to partner with 1,000 companies. I mean, they will need a whole sector department trying to monitor what those 1,000 companies are doing. When you have a standard, that requirement goes away. So then they have expansion without having to worry about compliance, right? So that's like, I give a very, again, long-winded answer to a very simple question. So yes, regulations are where they are. They've evolved for the particular problem, solving for a particular problem of that time. Now things will change and we will work with the environment to change them to make it conducive to an expansion mindset, but keeping consumer protection in mind. You're on mute, Arshad.
So lastly, one common question that we have received from multiple participants is, how do we see embedded finance in B2B business, growing in the financial sector and also in the ONDC? So if any one of you, sir, if you can start with it, with the response on it.
Yeah, I'll start with the ONDC response and then hand over to everyone else. Look, see, 80% of B2B transactions are also just sole proprietors. So sole proprietors are also just individuals, right? It's not like a partnership or private limited. Are we thinking about it on ONDC? Yes, we are. We will start with individuals, personal loans. We will start with an invoice-based financing based on GST data for sole proprietors. After that, we will enable purchase financing. In a phase 3 or 4, we will do it for partnerships and private limited companies because signing the loan agreements is the biggest challenge there. So the short answer is it going to happen? Yes, it is. In the next 2 years, it will happen. And in fact, hopefully in the next week or 2 weeks, we'll release the specs for all 3. Right. So I've been promising this for now 2.5 years. Hopefully I'll live up to that promise in the next 10 days.
Right. Final question, it's to all the other panelists, to Mr. Yashoraj, Mayuri, Vikul and Ajay. So, what advice would you give to the MSMEs on how to leverage embedded finance to grow their businesses? So if you can just quickly give some advice. Starting with Mr. Yashoraj.
Surely, I feel that I feel that it's going to be a great time for MSMEs because, as I said, with more democratization of data availability, with more democratization of tools allowing MSMEs to have an online presence, I feel there's going to be a lot of offtake that will come up for offering multiple services to SMEs as well. You've seen insurance for SMEs. You've seen obviously credit for SMEs coming up in a big way. We've also seen things as niche as account management, inventory management for SMEs picking up in a big way as well, because all of that is also leveraging all these additional alternate data sets that are now increasingly available. So I feel that it's going to be a great time, and that's why we are going to see a lot of empowerment of SMEs coming up in the next 3 to 4 years, precisely because of these factors. So I feel it's more about making sure that they are choosing the right partner for each of their sort of individual requests. Because with all of this also comes a great deal of noise. And unfortunately, it's very difficult to separate the noise out from what is legitimate, what is the right choice, because noise always seems the fancier option at any given point of time. So I think that's more important. Look at what is lying in your best interest. Look at what is not definitely sustainable, even though it might look great in the short term, and then go with those partners in their growth trajectories. That's what I'd shortly answer to that question.
Right. To Mr. Goyal, same question. So what advice would you give to the MSME segment?
Yeah, absolutely. So, technology can be daunting and overwhelming for a lot of us, right? Something that we don't understand and we haven't sort of engaged with in the past. And for MSMEs, I think that remained a bottleneck due to high costs involved and sort of lack of understanding in the past, right? But I think that has changed now, with companies like ours, with protocols like ONDC, with, embedded finance companies like CASHe, which provide those, plug and play solutions for MSMEs to be able to access those services and provide those services and products to their customers, right? And my advice to MSMEs would be just, embrace technology rather than, deny it. And that will really help grow the business and, have a better connect with their customers and provide a better customer experience across all levels, right? So that's and we have seen that in our business. I think Mr. Ajay mentioned about, Aadhaar Kendras and small retailers or businesses being able to provide a plethora of services. And in the past, what we've seen is DSAs have not been profitable because you make a small margin on one or two services that you're able to send. But now within the same, point of sale, you can offer multiple services without investing in the core backend or technology, because all you need to do is just plug and play different services, right, that you can consume and provide to your customers, right? So that suddenly becomes viable. So I think there are a lot of opportunities that will lead to growth of business, provide better customer service, and hopefully MSMEs can embrace that and connect with companies like ours, in order to be able to create a win-win situation for everybody, right? I think that's my hope.
Right. Same question to Mr. Ajay. So, sir, if you have any closing remarks.
I mean, MSME is the next big thing to be looked at. Everybody is focusing on MSME, whichever forum you go, whichever platform you go, everybody is talking about uplifting the MSME segment because they contribute a lot in GDP. They are like more than 10 million MSMEs in India. And if you go on Udyam registration, you would probably find their small entrepreneurs, proprietors there. They're probably running it and then creating 5 jobs, 10 jobs in the entire year. But since they have been underserved for a very long time, I think now that everybody is focusing on them, there are a lot of things that are coming to them. A lot of companies are offering solution. One of such is account aggregator framework that has been developed by the government. If you look at that, that will actually play a very good role in MSMEs increasing their business, because they get a lot of information about banks would get a lot of information about MSMEs. And I think that's going to help for sure. It's just that they have to be open. If they're listening, probably they have to be open and accept what can be there, what can help your business. A lot of companies are trying to solve the problems for MSMEs today. And if we do it into the right way, I think that would be the next big change we will be discussing in 25 or 26.
Right. Lastly, to Ms. Mayuri, ma'am, if you would like to add something.
So definitely embedded finance is undeniable the future for the financial services. So everyone should accept it, embrace it, And definitely, this is going to empower both the business as well as the individual. This is what I feel. So definitely people will accept those who have objections or any doubts on this. So this is going to give giving a smooth platform to everyone actually.
Right. We have few more questions, but we are running out of time. But thank you so much to all the panelists, our audience, for joining us today. And it was lovely speaking to all of you, all the panelists. And we'll share the questions with our panelists via mail. So please do keep it coming, and we'll be happy to answer you back via mail. So thank you so much, everyone. Thank you so much for joining. Please take care.
Thank you, everyone.
Thank you. Bye-bye.
Thank you so much.
Thank you so much.
Have a nice day.
Thank you.